Hello, I'm Colin Szynski, market analyst with CMC Markets, here today to discuss the U.S. market outlook for August of 2012. Throughout the year, stocks go up and go down in some fairly consistent seasonal patterns. Often they start the year fairly strong, have corrections around mid-year, and then tend to rally towards the end of the year. August is traditionally one of the weaker months of the year for stocks. It's during the summer, a lot of people are on vacation, news flow tends to dry up, and people tend to take money off the table to revisit situations back in the fall. So generally speaking, August tends to be quite soft for the US markets, the Dow, the Canadian market, the UK market, German market, Japanese market, pretty consistent across the world. A couple of exceptions, Australia and India tend to have reasonable months during August. September, often this continues as well. It's the weakest time of the year for stocks and generally is a little choppy through about the middle of October. By the later part of October, markets are often rebounding again. Looking at commodity markets is a very mixed performance depending on what you're trading. So gold tends to be fairly strong during August. However, silver, it tends to be quite a weak month. Also, copper tends to be fairly soft. U.S. crude tends to have a good month during August, but it tends to be a very poor month for gasoline. The late summer and early autumn is often a very weak seasonal period for trading in gasoline. Natural gas, however, often starts its most seasonally favorable period in August, depending on what happens with summer storms. But August is often a flat month and sets the stage for a much stronger period in September and October. Wheat tends to be reasonably strong during August. It is during one of its more favorable periods, whereas corn tends to have a little bit of a positive but more moderate performance. Some of the key trading themes that we're looking at as we move into August of this year. First is monetary policy. July was a huge month for new monetary stimulus. A number of central banks around the world came out with new rounds of monetary stimulus after holding off in June. It seemed as though in June everybody was waiting in case there was an emergency, a financial emergency related to Greece or Spain. And at the time it seemed as though the EU summit had sorted some of that out, and that opened the floodgates for a series of easings from a number of central banks around the world. Now that a number of them have come out, they may now hold off in August and see it as their programs continue on. However, there is a possibility in early August. We've heard rumblings about possible new stimulus from the U.S. Fed and also possible new actions to support the euro from the European Currency Board. It's important to note, and I'll speak to a little later, but looking ahead also, the U.S. election is coming. Campaign season starts in earnest in late August, and often just before that you have the vice presidential candidate announced. As we move forward later in the year, we recognize that there are a number of automatic spending cuts as well as tax increases that are due in the United States unless Congress can come up with some sort of new deal. So that may start to weigh on markets later in the month. The upcoming U.S. federal election and presidential election also means that if the Fed is going to do something, they're likely to do something sooner than later. If they don't do something in August, they may not do anything until December after the election is done. The Fed tends not to try to not act during U.S. election campaigns. Also, as we know, during July it went to the back burner, but it easily could come back in August, which is the European sovereign debt crisis. Most recently, there's been ongoing concerns about Spain and how much funding it may need with its regional governments running into problems. Also, of course, we have some posturing from the Troika and Greek politicians as they try to negotiate whether there's any wiggle room on their current agreements and trying to put through their austerity measures. So those are issues that could flare up in August, or they might not. It's hard to say, but they are also issues that, if they don't flare up in August, could easily flare up in September. Another question to note here is China. China's economy has been slowing, although there has been some indications lately it may be starting to stabilize. The question as we move into August is, having eased in June and July, is the PBOC going to ease again in August? Now, they don't have regular meetings like the other central banks, so whenever they do come out with an announcement, it's always a surprise because it's never scheduled. But generally speaking, the Chinese tend to release most of their data at once: consumer products and industrial production and retail sales and prices and so on. So they tend to come out over a 1 or 2 day time frame. Often the PBOC tends to move just before or just after this package of data is released, and this time it's due overnight between August 8th and 9th. So it is possible in the first half of the month we should have an idea if they're prepared to continue easing aggressively or if they're going to just start holding off a little bit. Finally, earnings season continues through the first half of August. Most companies should have their results out by August the 15th. However, we also do see the results come out throughout the month from US retailers, and also Canadian banks do towards the end of the month. In terms of politics, there are a couple of key dates to note. August is generally a vacation time, so we're actually seeing things really pick up right at the very end of the month. August 27th to 30th is the Republican National Convention. That'll be the semi-official kickoff to the election season in the U.S. And on August 31st is the Federal Reserve Board's annual conference at Jackson Hole, Wyoming. The Fed has been known to make statements, fairly significant statements about policy direction at this conference. In 2010, it was when they first hinted that the QE2 program would be coming, which eventually was finally announced in December of that year. So it's something to an event to be keeping a close eye on. As I've noted, there was quite a number of central banks went through a period of a real parade of monetary easing throughout the month of July, which I'll note here. In June, actually, it started with the U.S. Fed extending their twist operation through December. On July the 5th, we had 3 central banks come out in one day. The Bank of England increased quantitative easing by 50 billion, while the ECB and the PBOC of China announced interest rate cuts. On July the 11th, another round of easing. We had the Bank of Japan do a small increase to quantitative easing, but then we had interest rate cuts from South Korea as well as Brazil. Later in the month, we even saw South Africa also lower interest rates, while this month Australia, Canada, and New Zealand all held steady on interest rates. As we look now to August, and it really is the key period is between July 31st and August the 2nd, where we may see the most action. We have the Reserve Bank of India on July the 31st. They had held off like other central banks at their meeting in June, so it is possible that they could join other emerging markets and cut their interest rates at this meeting. On August the 1st, we have the Federal Reserve Board. Some Fed members have been suggesting that they could be starting to consider doing additional monetary stimulus. If they do or if they don't, could have a big impact on trading in the marketplace. On August the 2nd, we have the Bank of England, who is likely not to do anything since they just introduced more QE last time. That program is still underway. The European Currency Board recently, ECB President Draghi said they're prepared to do anything they need to do to shore up the euro, so it is possible we could see more discussion of this at this meeting. As we move throughout August, the rest of August, it's fairly quiet. Australia is pretty much on hold. South Korea cut interest rates in July. It remains to be seen if they'll do it again. The Bank of Japan had a quiet partial move during July. They may or may not do anything. Brazil's central bank is right at the end of August. It remains to be seen if they'll do something, seeing as they just cut rates at their last meeting as well. There continued to be a number of major earnings releases which can impact the market as we move through August. At the beginning of the month, we continued to see reports from financials, from insurance companies, MasterCard, MetLife, Prudential. As we move farther into the month, we start to get more earnings releases from the U.S. retailers. It's important to note their quarter ends July, not June, so we will see reports from them throughout the month. We start with JCPenney and Macy's. As we move farther through the month, we get Home Depot, Target, Walmart, and then towards the end of the month we have the computer manufacturers Dell and Hewlett-Packard, and also the Canadian banks start to report as they have a July quarter end as well. There are a number of instruments that we could see active trading off of depending on the news developments we see throughout the month. So in terms of Europe, European developments tend to impact major indices such as Italy, Spain, France, and Germany, particularly focused on the Eurozone. In terms of commodities, it's US and UK crude oil, and in currencies we look at gold versus the US dollar and against the euro, also euro US dollar, pound US dollar, and another one that's been significant and shown some strong strong trends in recent months has been the euro-pound relation as well. They haven't always been going in the same direction, so there's some different performance there that people can take advantage of. In terms of news from China and emerging markets, with indices, we look at the China A market as well as India and Hong Kong. And also you can see some moves in Australia and New Zealand can also be impacted by the Chinese economy because they're such big exporters to them. The key commodity is influenced by the Far East is copper, and in currency trading we look at primarily the Aussie dollar and the New Zealand dollar. Looking now at central banks and particularly the Fed meeting, either the Fed meeting on August the 1st or the Jackson Hole meeting at the end of the month, and the U.S. economy, that could both have significant impacts clearly on trading in the U.S. dollar in terms of currencies, gold, U.S. dollar CAD, and the U.S. dollar against pretty much everything really, depending on whether they come out with new stimulus or not. In terms of commodities, obviously U.S. crude and other energy commodities are impacted by moves in the U.S. dollar. Also, this month we could be significant action in the grains based on how the weather turns out. For the last couple of months, we've had a huge rally in wheat and corn and soybeans as this drought has become worse and worse. Depending on what weather conditions are through August, could have a big impact on trading in the grain markets. And indices, of course, for the United States, we look primarily at the Dow and the S&P. However, the NASDAQ has also been interesting this month. It has had some divergence based on earnings and reports from some of the major technology companies. For example, Apple had missed on earnings, and that dragged down the index and caused it to underperform on a day when the Dow, for example, which did not have Apple in it, outperformed. Looking now at technical updates are available on our chart message boards on a number of our major instruments that we trade, whether it's currencies or commodities or indices. Technical comments come from both our analysts and our clients on many of our most popular and actively traded instruments. They're available on the next-gen SpreadBet and CFD message boards. These are updated regularly, so we encourage you to visit and to ask our analysts questions and to post your own thoughts. Finally, we'll conclude with our risk warning. This video is for general information only and is not intended to provide trading or investment advice or any personal recommendations. The information in this video is indicative and may become out of date at any given time. CMC Markets shall not be responsible for any loss that you incur either directly or indirectly arising from any investment based on any information in this video. Please remember, spread betting and trading CFDs can carry significant risks and may not be suitable for all investors. Losses can exceed your initial deposit. We therefore recommend that you seek independent advice and ensure you fully understand the risks involved before trading. You do not own or have any interest in the underlying assets. CMC Markets are not available in the United States or any other jurisdiction where they are not permitted to be used or provided. We highly recommend that you practice trading using the demo account before you open up a live account. And that concludes this video. We encourage you to visit other videos that we have available in this series.